Today, right now, as we speak, a new war has started in the Middle East. And in just 72 hours, when the world's financial markets open, well, that's when we're going to find out the price. The real question isn't if the markets will fall, it's how far. Are we looking at a $5 trillion crash? Or, could it be much, much worse?
It all started this morning. The United States and Israel launched something called Operation Epic Fury. It's a series of joint airstrikes targeting Iranian military and nuclear facilities. And let me be clear, this is not a drill. It's not some far-off possibility or a war game. This is happening right now.
And Iran didn't wait. Their response was almost immediate. Within just a few hours, they launched their own missiles at Israel and started hitting U.S. military bases all across the Gulf.
And that number? 72? That is how many hours we have until Monday morning. That's when traders in New York and London and Tokyo are all going to try to put a price on this chaos. We are literally on a countdown to a global financial reckoning. So this is the really crucial point, right? How do bombs being dropped thousands of miles away connect to your retirement account, to your savings, your future? That's the connection we're going to break down right now. We're going to go past the headlines and look at the economic chain reaction that links this conflict zone directly to your kitchen table. Let's just start with the absolute worst-case scenario. Gita Gopinath, who's one of the most respected economists on the planet, warned that a major conflict like this could trigger a $35 trillion crash. To give you some perspective, that is more than the entire annual economic output of the United States. That's the nightmare scenario, and it's what makes these next 72 hours so incredibly critical.
Okay, so to understand how you get from a regional war to a global market meltdown, we have to look at one very specific, very small place on the map. A place that basically acts as the jugular vein of the entire global economy. This is it, the Strait of Hormuz. At its narrowest point, it's just 21 miles wide, and Iran controls that entire northern shoreline. But don't let the size fool you, because what flows through this tiny strip of water is the absolute lifeblood of the modern world.
That's how many barrels of oil squeeze through that strait every single day. 20 million. That is 20%, a full 1/5 of the entire planet's daily oil supply. We're talking about all the oil from Saudi Arabia, the UAE, Kuwait, Iraq. It all has to funnel through this one little spot. So here's the immediate risk. If Iran decides to retaliate by shutting down that strait, 20% of the world's oil could just vanish overnight. The price of oil, which is around $73 a barrel today, wouldn't just go up, it would explode. Analysts think we'd see a spike to $140, or if there's a prolonged shutdown, maybe even $200 a barrel. So what does that actually mean? A $200 barrel of oil isn't just a problem for Wall Street traders. It's a shockwave that slams into every part of your daily life. Let's trace that chain reaction, from the bombs all the way to your budget. Okay, first, you'll feel it at the gas pump. Prices would pretty much double to over $6 a gallon. But it doesn't stop there. See, the diesel fuel for all the trucks that deliver our stuff, that doubles too. So shipping costs go through the roof, which means your groceries, your packages, pretty much everything costs more. And remember inflation? Just when we thought we had it under control, it would come roaring back. This leads to a really nasty economic problem called stagflation. That's when the economy is shrinking, but prices are still going up. It puts central banks in a terrible position. If they cut interest rates to try and help the economy, they make inflation worse. But if they raise rates to fight inflation, they'll crush the economy even more. It is a policy nightmare, a total trap.
Now you might be thinking, hang on, we've had wars in the Middle East before, and the markets always bounce back. And you'd be right. But the really important question we have to ask is this time different?
And the short answer is, yeah, it is. In past wars, the goals were limited, like kicking Iraq out of Kuwait. But this time, the stated goal is regime change in Iran. So Iran has absolutely no reason to back down. They're going to fight with everything they've got, and that includes their ability to threaten that Strait of Hormuz. This is a fundamentally more dangerous and unpredictable situation.
Okay, so with the clock ticking down, what can we realistically expect when the markets open their doors on Monday? Well, the experts are looking at 3 main ways this could all play out, and each one comes with a very different price tag.
Analysts are pretty much breaking down the odds like this. The most likely outcome, sitting at a 45% chance, is a prolonged, drawn-out war. A shorter, more limited conflict is seen as a 40% possibility, and then there's the catastrophic escalation, with a terrifying 15% chance. Let's look at what each of those would actually cost us.
So, the most optimistic case here is a limited conflict. A quick fight, a quick resolution. In this scenario, oil prices spike up, but then they fall back down as the Strait of Hormuz stays open. The stock markets would see a sharp drop, about 5 to 10%, that's our $5 trillion loss, but then they'd start to recover within a few weeks. It would be painful, for sure, but temporary.
Now, let's look at what's considered the most likely scenario, a prolonged war that just drags on for months. In this reality, oil stays high, which is enough to kick off a global recession. Stock markets would probably fall about 20 to 30%, wiping out $10 to $15 trillion in wealth. This would be a really painful downturn, lasting well over a year.
And finally, the nightmare scenario. This is what happens if Iran makes the desperate move to actually close the Strait of Hormuz. Oil would skyrocket towards $200 a barrel. This would cause a market crash of 35% or more. That's the $35 trillion loss we mentioned earlier. We would be staring down a severe global recession on the same level as the 2008 financial crisis, or maybe even worse.
So as we head into Monday, here are the 5 key things you should be watching. 1. Tanker traffic. Are ships still getting through the strait? 2. The price of oil, right when the market opens. Anything over $130 is a major red flag. 3. The official statements from Iran. Are they talking about backing down or doubling down? 4. U.S. military posture. And finally, number 5, the VIX. It's known as the market's fear gauge. If you see it spike above 30, that tells you the pros are hitting the panic button.
You see, what really crashes markets isn't always the war itself. It's the uncertainty about where it's all going. The opening bell on Monday, that's going to be the first real vote in a global referendum on fear. Because in the end, the fate of a tiny 21-mile-wide strait of water 7,000 miles away could very well decide the fate of your 401k. The only question left is, which scenario is it going to be?